There's several market influencers that help drive the marketplace. One of them is consumer confidence. How confident are people that they're going to have their jobs and money to spend and make their mortgage payments? And you can see that we're looking at an all-time high here in October. So people are feeling good about their money and their jobs. So that's a very positive sign for the real estate market. Then you've got inflation, and we have now hit inflation at about 1.6%. This band here between 3 and 2% is the Bank of Canada's goal in terms of where they'd like to see inflation. We're hitting those numbers. So that's fantastic in BC and in Canada as a whole, which is what the Bank of Canada looks at. The rate of inflation is definitely on the right track and actually even below the 2 to 3% range that the Bank of Canada looks for. Now, of course, there are factors that can change this as we have had elections and things changing in our world, and different economic policies are probably going to take place. So this can change in the future, but right now things are looking good with respect to decreasing inflation, which also can set up the Bank of Canada to continue to decrease interest rates. Another market influencer is interest rates. And you can see here, I like this graph because it shows you this dark line. I'm sorry, it's fuzzy, but this dark line is the 5-year variable rate. And you can actually see that the variable rate has become more expensive than the 5-year fixed rate, which is influenced by the bond market, which we're going to take a look at next. And the variable rate is influenced by the Bank of Canada's decisions with respect to the interest rate. So currently, it's still better to take a fixed rate, but that's starting to change. There's not too many variable rate cuts to come that could actually bring things back to being pretty aligned. However, you're going to need to speak with a mortgage broker to really get the numbers and see what your level of tolerance is in terms of having a variable rate or a fixed rate, because while right now it looks like Bank of Canada will be continuing down its path of interest rate decreases, with any kind of unexpected changes or inflation pressures like the Canadian US dollar, that could cause the rate reductions. So right now interest rates are heading in the right direction. We're going to have another interest rate announcement in December. The majority of the market is anticipating another decrease. Inflation's coming out November 19th. That's going to be next week. So we'll see how things are going. And if it's below that 2% target rate, then more than likely we're going to see the Bank of Canada reducing the variable interest rate further. The bond market, it controls the fixed term rates. And so I like to add this here because back in September, the bond market was sitting at 2.7. That's the actual bond market. Then of course, lenders lend it out to you at a premium. But I wanted to show that recently, back in May of 2024, it was quite high at 3.8. But recently, with some of the new changes like the US election, there's a lot of positivity for the economic climate in the US and that their economy could be very strong. And that could be actually quite inflationary for us here. And we're also starting to see bond market reacting. Now you can see it went down from 2.7 up to 3.1. So the bond market's actually up a little bit in recent days. And that means it's predicting a stronger economy than we're anticipating, and or because of certain inflationary pressures that may come. So something to keep in mind. Another thing I wanted to mention is, in terms of the 5-year fixed term rate, it's probably going to be as good as it gets right now, bouncing around where it's at. It's that variable rate mortgage where you could potentially see further decreases from the Bank of Canada as we get more economic insights. And they do have a plan to move it lower. So it could be a strategy that you want to look into and could be a favorable mortgage product as things move forward here. Now, the other market influencer is inventory. So we were talking about inventory, which has been a relief, sitting at 15,000 listings. Some of us gawk at it because we're used to only having 8,000 or 9,000 listings, because you can see historically, even like the last 5 years, we really haven't had many times in our market where we've had 15,000 listings. Once was in 2019 after the original stress test was announced, and that was raising interest rates by 3% all at once. And that, slowly changed and made its way through the market. And here we are, we're not even sitting at peak inventory levels like we were back in 2019, and even more so back in the GFC, the financial crisis, sitting at 20,000 units and well above 15,000 units. So we're nowhere near what has happened in the past, and you can see we're actually better off than in 2019, and things start to look like they're starting to tighten up moving forward. Okay, and other factors that could really influence this market, and particularly the spring market, are the recent rule changes. We've already discussed this, but for those of you you that may have missed it, the stress test was eliminated for uninsured mortgage switches. So if you have a mortgage and you are up for renewal, you don't have to requalify under the stress test. So that allows more competition in the mortgage market, and you can shop for a different lender and hopefully get the best rate as you're coming into a higher rate environment. The insured mortgage price cap has increased from $1 million to $1.5 million, which means you can now put less than 20% down on a property that is over $1 million, but capped at $1.5 million. That's starting December 15th. This is a big deal. This is going to allow buyers in markets outside of Vancouver and Burnaby, where you can actually buy houses for sub $1.5 million. You could actually put less than 20% down if you qualify. So that is a positive in term and will generate more demand in the marketplace, particularly come the spring once this policy is in place. There is a new product for adding secondary suites to your homes. That's another product that's been rolled out. 30-year amortizations are available to first-time homebuyers and any buyer looking at pre-sale or new build property. And the stress test has also been eliminated to switch lenders. So we've covered that already. With that, I thank you for your time and I look forward to seeing you next month. Make sure you like and subscribe to my YouTube channel, our Instagram account, and if you're not already, subscribe to our newsletter so that you can get this market update to your inbox. Wish you all the best and look forward to connecting with you.